Welcome back to After Earnings. I'm your host, Anne Berry. Today we spoke to Shelagh Glaser, Chief Financial Officer of Synopsys. This roughly $80 billion market cap company touches multiple parts of the chip supply chain. Similar to how AutoCAD is used for architectural design, Synopsys builds software and tools for chip designers like NVDA, whose engineers rely on Synopsys software to create cutting-edge designs. Synopsys also collaborates closely with foundries like TSMC, Samsung, and Intel to develop tools and IP that support chip manufacturing processes. And when it comes to the so-called hyperscalers, the big cloud providers like AWS, Microsoft, and Google, Synopsys' electronic design automation tools enable them to develop their own custom AI chips. 2024 was a banner year for Synopsys, with record annual revenue of $6 billion, growing 15% year over year, capping a 5-year run of a 24% compound growth rate in its earnings per share and a more than 200% rise in its share price. Looking ahead, Shelagh broke down how Synopsys plans to use new products and AI to drive organic growth in 2025. And the rationale for pursuing a $35 billion acquisition of ANSS, anticipated to close in the first half of 2025 also. And the global landscape is shifting, with Wall Street analysts looking for more clarity on how restrictions on chip activity in China will impact Synopsys in coming years. We asked that too, so let's get into it. Shelagh, you've had a strong quarter. Congratulations. We'll dig into that shortly. But I wanted to start with some of the strategic partnerships that you've been talking about a lot in and around earnings season. You've talked about your collaborations with TSMC kicking up. You've had a partnership there for over 20 years, for example. Tell us about what's new in those long-standing relationships.
Yeah, so great to be here, Anne. Thanks for having me. TSMC is obviously one of the key partners with us and the entire industry and being able to manufacture leading edge technology. And as you mentioned, we've had a partnership with them for decades. You can think about Synopsys as being the on-ramp onto a new factory. We build the IP, we build tools that allow customers to build chips. And so as we're all racing ahead to the next node, really the capabilities that we have are becoming even more fundamental to allow TSMC to ramp those new nodes and get great results for their customers.
When we look at the applications of chips and we look at the way in which the Internet of Things has expanded to sort of smart everything, certain sectors have really picked up in the imagination of the investing public. The automotive sector is one of them. Can you talk to us about how your relationship with TSMC and others is getting deeper into the auto sector?
Yeah, you're so right about really everything smart, and it all starts with silicon. And so if you think about what's happening right now, and automotive is a great example, we're changing a car into essentially becoming a software-defined vehicle, which is, a massive change in thinking about how that car is architected and how that car is optimized. And so what we do, both in partnership with the end customer, who might be an automotive customer, and somebody who's providing silicon to them, and TSMC, is partner to make sure that those chips that are being designed for that customer have the right power performance specs. And in a car, the task is to make sure that the car has the features and capability that you need, but also with a range that's acceptable. And that's an enormously complicated problem to solve, because if you think about the more chips that you put into a car, the more power those chips need. But you want to preserve power so that the car has a reasonable range when you go as a consumer to buy the car. And it's really us helping make sure that those are all properly optimized and creating tools and capabilities for each layer of customer to be able to make sure that when they're delivering the chips into an automotive vehicle, that those chips are going to have the right power performance and create the right safety environment, but also create the right range. So it's an enormously exciting endeavor to think about cars becoming software-defined vehicles, but making sure that that chip design is really optimized for that use case is what we help all those customers do.
You've also been leaning into auto with ARM, Shelagh. Talk to us about that relationship. It's another long-standing one. And since ARM's gone public, that's a client I feel has been more and more present when it comes to capturing the consumer imagination as well?
Absolutely. ARM is such an important partner for us. You can think about ARM as the #1 leading IP company, and they build CPUs, and you can think about it as sort of compute engines that are used really everywhere in the industry. And we build what's called interface IP blocks. So you think about the communications, the networking, sort of all the things that link those compute engines together. And so we've got a deep partnership with them. And as you said, we've been partners with them for decades. And as we're all racing ahead, automakers are racing ahead, AI is racing ahead, the need for an even tighter partnership and even faster collaboration is so important.
It's amazing that we managed to get as far into this conversation as we have without using AI. It just came up in our chat, in your comments, Shelagh.
Yeah.
Talk to us about how AI is infusing Synopsys's operations. Talk to us how about you're using AI internally to optimize what you do.
Sure. We think about AI in sort of 3 swim lanes. So first of all, and we'll talk a lot about, I think, about what's happening in the industry outside of us as we help customers build these increasingly complex chips. And then we're infusing it into both the tools that we sell to the customers and how we do our own development. So one of the things that plagues our industry is not enough skilled talent. So the demands of computing and the demands of the complexity is getting higher and higher. The ability to hire and train people to be able to manage that complexity just isn't there. And so we need AI to actually help lower the complexity so that routine tasks are done by AI. We've infused both machine learning and Gen AI into our capabilities, and then the precious engineers that we have can work on innovation. And so we, on a regular basis, are looking at how we can simplify many of the tasks that we do, so our engineers are able to spend more time on innovation. And recently, we've infused Gen AI that allows engineers to quickly source and understand what are best known methods that they can employ in some of their design and development, so that again they're leveraging the accumulated learning versus having to search through manuals and things like that to try to find answers to complex questions.
Shelagh, as CFO, you have the tough task of taking buzz phrases like AI and trying to see how they really translate into the numbers. The numbers bring, shine a light on true impact. When you look at the applications of AI internally in the ways you've described, what kind of margin uplift does that create for Synopsys in the form of cost reduction and productivity enhancement?
Yeah, so we think about AI as one of the levers. We have been very focused on driving operating margin. This past year, we drove 200 basis points improvement to 38.5. We've guided another 150 basis points to 40% at the midpoint. And so AI is definitely one of the levers. And where we really focus on is making sure we're a large engineering company, as you might suspect. That's the substantial amount. How do we make sure that we're allowing ourselves AI to help create more capacity for our engineers? Because obviously we hire enormously talented people. We want routine things done by AI, and we want them to focus on innovation. It's been a big part of how we're thinking about driving the margin of the company.
And then let's talk about how AI is translating into revenue opportunity. It was a banner 2024 for Synopsys. You had record revenue and 15% year-over-year growth. How much of that was attributable to a new product cycle that had a greater AI infusion than we've seen in prior protocols?
Well, as I talked about, we kind of think about it in sort of 3 swim lanes. The amount of people making AI chips is at an all-time high. And so we benefit from that because if you can think about, we are the software tools that people use to develop semiconductors. And so we're sort of if you were the engineering platform that they use to be able to create that. So the fact that more and more people are creating, as we've been talking about, workload down driven chips, and a lot of those are AI chips. And we're seeing customers really want to have the right chip for the right purpose. And obviously kind of the explosion of all these different models and explosion of all these different needs, that is fueling quite a bit of growth for us, those increased AI chips. And the other piece is we have infused into our tools AI capabilities. So if you think about our tools being the software development platform, in each part of the software development platform for chip design, we've infused AI. So we use, one of the examples we use is design space optimization. That's where you decide how to lay your chip out. That's a very consequential step. And right now, if you only have a limited time, you can only consider a couple options. With our AI infusion, you can look at multiple possible options. And when you get the best option, you're going to have the best power, the best performance. And if you're going to sell one chip, that's great. But obviously, if you're going to put millions of chips in a data center, making sure you've got the best power performance at the chip level is one of the most consequential decisions you can do.
And Shelagh, when you take an example like that, where the AI infusion that Synopsys is putting out there is creating real value for your clients, how much have you been able to increase price? So when we look at that 15% year-over-year growth, how much of that came from taking price action?
When we really think about it, it's kind of twofold. One is you need more underlying licenses for our AI, and then secondly, you buy AI on top of it. And so we think about it as one of the key drivers and how we're driving our revenue growth over time.
And let's also talk about your client base. You drew the distinction up front talking about TSMC in the auto sector, about how you would actually partner with both, with the foundry, that's TSMC, but also with the actual auto manufacturer and designer. When we think about your client base, could you break it down for us? What proportion of your revenue roughly is the foundries versus the hyperscalers versus the end users in the industrial space or in other sectors?
So the way we think about it is about 45% of our customers are systems companies. So you can think of a systems company as like a hyperscaler. You can think about it as an automotive company, and the balance is traditional semiconductor.
Got it.
And so when we're partnering with somebody, they're going to make a decision about which foundry they use. Traditionally, so they might choose TSMC, they might choose Intel, they might choose Samsung. So we're deeply in the middle of that partnership because we need to be able to partner with them so that they can do their internal design, but also importantly, making sure that that is going to be a successful design at the foundry or at the manufacturer. So you can think about that as being sort of a three-way relationship, because for us, the most important thing is making sure that the chip is successful. So obviously we're a part of the design, but we need to make sure that the design ends up in a successful chip. And you can think about our customers, like in the traditional semi space, our customers like AMD, their customers like NVDA. And then you can think about customers that are in the system space as customers like Meta or Amazon or Microsoft or Google. So you can think about sort of each one of them is building chips, and the relationship with us is both in partnership with them and in partnership with whatever foundry they're choosing to make their chips on.
Shelagh, you're at a global business, but I'd love to take advantage of the fact that Synopsys has such a unique position working across the board in the way that you've described, to talk about the outlook for the chip industry here in the United States. You mentioned Intel as one of your clients. They've seen some softness. They've also been the recipient of funds through the CHIPS Act to try and turn some of that around. Out at the near term, you look at the impact of the CHIPS Act, for example. What's your perspective on growth here, nearshored, onshored in the United States?
Well, one thing we're seeing with customers is they really want to have a resilient supply chain.
Mm.
And so I think one of the things that, obviously we saw in COVID was the situation where all of a sudden things couldn't ship
Right.
because there was a chip missing somewhere in the build. And one of the things I think the industry has resolved to is making sure that we've got a resilient supply chain, because any number of things could disrupt the supply chain over time. So I think it's exciting to think about the ability to be able to have leading edge manufacturing in the United States and actually really across the globe, because as everything, it's really almost what you talked about in the beginning. Everything's becoming smart. And when you think about things becoming smart, silicon's really at the base of that. So creating a resilient supply chain, I think, has become important to the United States, has become important to a lot of governments throughout the world. And I think it's an exciting time that it's seen as one of the top priorities, really a matter of national security, which if you think about, disruptions that can happen, which could be, any number of things, we need to make sure that we've put the right things in place to be able to weather those disruptions.
One area, one geographic area that you talked about, Sheila, or at least you got a lot of questions on this in your earnings recently. Again, a great 2024, and then there was some guidance provided for 2025. And there was one area that the different analysts, Morgan Stanley being one, I did read your transcript. I know a couple of folks asked. The feeling was that the outlook provided on China, and China as an end market for you, was perhaps cautious, perhaps conservative. You can pick the word, but just flesh out for our audience a little bit what outlook you provided to the street for Chinese activity.
Sure. As we thought about 2025, we really wanted to be balanced and pragmatic. What we've seen happening in China over the last several years is there's many restrictions in China, both in terms of specific named companies and then also restrictions on where compute can happen, what leading edge nodes, and then, how much compute per mil has happened. It's really caused a constrained environment in China. And so if you think about, there used to be any number of startups in China.
Yeah.
It was a very vibrant, and as, entity list has come about, there's fewer and fewer of those. And then as companies contemplate, will my chip be able to be manufactured? Will I be able to, will the restrictions restrict me from being able to manufacture and sell this? That really causes, companies to take a pause and think about what they want to put their engineers on, because they don't want to work on a project that won't end up coming to fruition. And for us, we wanted to be really balanced and pragmatic. I think the other situation in China is that the economic environment there is not as robust as it used to be. So when we think about China, we think of it still being an area of opportunity, but we think about the growth as having slowed in China.
There are some other geographies where there have been huge amounts of capital infusion, both sovereign capital and private capital, Sheila, into developing chip and chip adjacent industries. The Middle East is one. You take Lenovo, for example, had a huge investment from Alat, which is a Saudi Arabian-backed entity. As you think about the Middle East, for example, or if you think about Singapore, are there strategic partnerships you're looking to strike in those regions as growth in this sector continues to evolve?
Well, for us, when we think about, who needs to partner with us, it's really the people that are interested in building the chips. I would say those are primarily the people we partner with. And really, if you think about anybody who's trying to build leading edge chips, we're the leader in digital design, which is, we've been talking about AI. That's really what AI is. And so you can really think about us as, being a global partner with really anybody who their goal is to build advanced chips.
Let's talk a bit about the expansion of your capabilities, Sheila. Let's talk about your $35 billion pending acquisition of ANSS. Now, at the time that that deal was announced in January, Synopsys' market cap was about $80 billion. So this is a chunky deal for you guys, set to close, I know, fingers crossed, in the first half of 2025. Talk us through the strategic go-to-market reasons for Synopsys buying ANSS.
Absolutely. So, as you think about what's happening, we've talked a lot about we're the engine in digital design. So, you can think about us as having a design tool environment for our customers when they're building a chip. They're the leader in thermal mechanical design. So, when somebody's turning it into, packaging it and putting it into the manufacturing, they've got a simulation and an analysis environment that allows customers to understand how that's going to perform. What we want is we wanted to build those two and bring those two design environments together. So the engineers have a single design environment so they can actually really see where the problems are going to be very, very early in the design. And we really talk about the silicon to systems, because if you think about what's happening with our customers, they're really looking at the workload. What workload are they trying to optimize? So you and I talked about automotive. So in automotive, the workload they're trying to optimize is having a car that's safe, secure, that's got the right features, that's got an optimal range. If you think about a hyperscaler, they're trying to optimize, power performance for a particular workload. And right now, these are two different design environments. We really want to bring these design environments together because, for instance, when you think about complex chips right now, they're becoming what's called multi-die. So in the old days, they used to be sort of single-story ranch homes. Now they're turning into condominiums, high-rise condominiums. And right now, in the design environment, you can see what's going to happen at the chip level, but you can't see when you stack all the chips on top of each other what's going to happen early enough in the design. So you end up later on finding out that there's warping and cracking. But if you understood that early in the design cycle, you would have optimized the chips differently. So it's a super exciting opportunity, one that our customers are very supportive of, because right now having two different design environments means for them they can't build the products at the rate they want to build them. And when they're solving the problems, they're solving them late in the process, which means it's way more costly for them to solve the problem. So it's a really exciting opportunity to bring basically these two different design environments together to be able to service our customers even better.
You get a lot of kudos for being able to bring a housing analogy into describing this, Sheila. It's not easy to find those to bring to life some of the product. I want to finish off Sheila, by talking a little bit about your personal journey, because when I read your bio, I was really struck by, you've been in the chip world for a long time. You were at Intel for 29 years or so, but then you had a foray into Zendesk. Talk to us a little bit about that professional shift to be to a CRM company serving a very different space, and then coming back into the sort of chip world, admittedly in a slightly different part of the value chain.
Yeah, it's one of these things where everything always makes sense when you look in the rearview mirror. And so sometimes I think just, career advice, you kind of have to trust the process because in the end, it all does make sense. So I worked at Intel, as you mentioned, for several decades. I had lots of jobs inside Intel, both in the PC business and the data center business, M&A experience. So, wonderful time at such a wonderful company. And then the thing that I really didn't have experience with, I had lots of experience with hardware, silicon. I didn't really have experience with software. So that was really one of the areas that I was very interested in getting a broader experience. And Zendesk is obviously a wonderful company, customer support software. The value proposition is, fast time to market, lower TCO. Who doesn't need both those things? So wonderful company. So it was a great experience to all of a sudden be in a software company where really the value proposition to the customer is a set of software capabilities. And then I come all the way full circle back to Synopsys. And what do? We create software so that people can make silicon chips. So it's like the marriage of both those things. Now, if you would ask me, did I exactly know this is how everything was going to play out? That's why I said you kind of have to trust the process sometimes in your life. No, but it actually is the perfect combination. Having worked for a dedicated software company and now coming back to a company who a lot of our products are really software products that enable the chip development. And so I understand chip development very deeply because I was a part of a company that, obviously is, at its core, a chip development company, but also understanding how software works and understanding sort of the, capabilities that software can unlock. And the great thing is that any modern smart anything needs a combination of both silicon and software. So I think that's, that combination is a great combination. And obviously through my professional career, I've been able to build capabilities in both of those.
Shelagh, in my experience on boards and in running companies, the stereotype has been that CFOs come from two buckets. One is on the deep accounting side or tax expertise side or treasury side, and the other has got a more operational bent. FP&A, or really the business partner to the operations. You've done both and you've had a lot of exposure to the operations, not only at your time in Intel, but at beyond. Tell us how that's positioned you to have a different lens.
So to me, I did grow up more on the FP&A and the operations side. And so I really think about finance as the integration of the strategy into results. And so I think about my role as how do I help enable those outstanding results? How is it the work that my team does? Because any finance team is going to be small but mighty compared to the rest of the organization. How is the work that we do helping sort of unleash and unlock that full potential of the company? And so having both a finance and operating role means you're a part of delivering those outstanding results and creating the systematic way that those results get delivered inside a company. And to me, that's extremely fulfilling because my role I see inside a company is how do I help have the strategy and the financials create basically a scorecard of an ongoing A. And you can really do that as you are a part of delivering the operational results. And I've always thought about my job isn't just to tell people what the answer is. My job is to help people, how do we all collectively get to an even better answer?
Shelagh Glaser, CFO of Synopsys, exciting times to see you using all of your skills in this next chapter of growth. Thank you for joining. I'm Anne Berry. Thanks for tuning in to After Earnings, the show that brings you up close and personal with the executives behind the world's most interesting publicly traded companies. If you learned something today, don't forget to like, subscribe, and share with your friends.